Jordan Belfort made $49 million in 3 months selling garbage to people who trusted him. And the reason you've heard of him isn't because he got caught, it's because he became a movie. But here's what the movie doesn't really explain: how the scam actually worked. Not the parties, not the drugs, not Leonardo DiCaprio screaming into a phone. The mechanics, the structure, the reason it was legal just long enough to make everyone rich. Because what Belfort did wasn't complicated, it was brutally simple, and that's exactly why it worked. Let's start with what Stratton Oakmont actually was. It wasn't a hedge fund, it wasn't a bank, it was a brokerage firm, which means it existed to do one thing: connect people who wanted to buy stocks with people who wanted to sell them. That's it. You call them, they execute the trade, they take a commission. Normal brokerages make maybe 1 or 2% per trade. Stratton Oakmont made up to 50%. And they did it by selling stocks that nobody else would touch. Here's how it worked. Step 1. Find a dying company. Something real but worthless. A shoe manufacturer that's bleeding cash. A tech startup with no product. Anything traded on the over-the-counter market, which is basically the bargain bin of the stock exchange. Stocks so cheap and so obscure that nobody's watching. Step 2. Buy a massive position in that stock for almost nothing. We're talking pennies per share. You could control millions of shares for under $100,000. Step 3. This is the key. You become the market maker. When a stock is barely traded, there's no real price. There's just whatever someone's willing to pay. And if you own most of the shares, you set that price. You control the supply. Now comes the genius part. Step 4. Hire a room full of salespeople who can sell ice to penguins. Train them on a script. Give them a boiler room, a phone, and a list of people with money. Step 5. Call those people and lie. Not obvious lies, sophisticated lies. The pitch went something like this. I'm calling because we're about to take this company public in a major way. Right now, it's trading at 50 cents. In 6 months, analysts are predicting $4, maybe $5. This is pre-IPO ground floor. I'm only calling my best clients. You, the investor, hear that and think, this is insider information. This is the edge I've been waiting for. You don't know that the analyst is a 23-year-old in the next cubicle. You don't know the price target is completely fabricated. You don't know the only reason the stock will go up is because 50 other people are getting the same call right now. So you buy. Let's say you buy 10,000 shares at 50 cents. You just spent $5,000. Now, here's what happens next. The broker who sold it to you didn't make a 2% commission. He made 50%. That's $2,500. Half your investment went directly into his pocket before you even owned the stock. But you don't see that. All you see is a confirmation slip that says you own 10,000 shares. And then, for a few weeks, something magical happens. The stock goes up. 50 cents becomes 70 cents, then $1, then $1.50. You call your broker, ecstatic. He tells you to hold. We're just getting started, he says. I'm hearing $3 by end of quarter. What you don't realize is that the only reason the stock is rising is because Stratton Oakmont is calling hundreds of other people with the same pitch. They're creating demand out of thin air. It's not based on earnings or products or anything real. It's based on coordinated buy-in pressure from people who think they're getting in early. This is called a pump and dump. And you're the dump. Because here's the thing. Belfort and his partners already own millions of shares, remember? They bought them for pennies. Now that you and everyone else have driven the price up to $1.50, they start selling. Quietly at first, then aggressively. They unload their entire position at the top. The price collapses, and by the time you try to sell, there's no one left to buy. The stock falls back to 30 cents, then 20, then delisting. You've lost most of your $5,000. Belfort just made $1.4 million. And technically, none of it was illegal, at least not at first. Let's pause and appreciate the structure here. This wasn't a Ponzi scheme. Those require new investors to pay old investors. This was cleaner. You bought a real stock. It had a real ticker symbol. You could see it on the board. The scam was in the spread, the invisible margin between what you paid and what the stock was actually worth. Stratton Oakmont acted as both broker and dealer. They bought the stock from themselves at one price, then sold it to you at a completely different price, pocketing the difference. That markup, that 50% commission, was buried in the trade confirmation in language nobody read. And because these were penny stocks, obscure and unregulated, there was no oversight. The SEC wasn't watching. FINRA didn't care. As long as the company was real and the stock was real, it looked legitimate. What made it illegal was the lying, the price predictions, the fictitious analyst reports, the high-pressure tactics. But proving that in court, that took years. Now let's talk about the people making the calls. These weren't financial experts. Most of them were kids in their 20s with no college degree and no licenses. Belfort recruited them from car washes, gyms, furniture stores. He wanted people who were hungry, desperate, fearless. He put them through a system he called the system. It was part sales boot camp, part psychological warfare. He taught them how to control a conversation, how to overcome objections, how to create urgency, how to make someone feel like they were missing out on the opportunity of a lifetime. The script was everything. It opened with a shock. You don't know me, but in the next 30 seconds, I'm going to make you money. Then it built credibility, fake credentials, fake track records, fake urgency. Then it closed with pressure. I've got 3 other clients on this. If you want in, I need an answer now. And it worked. Because people want to believe they've been chosen, that someone on Wall Street is giving them the inside track. The brokers made insane money, 6 figures a month, some of them, 20-year-olds buying Ferraris. And the culture Belfort built rewarded that. Cocaine in the bathroom, strippers in the office, public humiliation for anyone who didn't close. It was a cult, and the product was greed. Here's the part that makes it darker. The victims weren't idiots. They were teachers, plumbers, retirees, regular people who saved money and wanted to invest it. They trusted the voice on the phone because that voice sounded confident, professional, informed. Belfort specifically targeted people who didn't know better. He called them schmucks. In his own words, he said the key was finding someone with money but no financial literacy. And once you hooked them on the first stock and it went up, they were yours. They'd invest more, bigger amounts, because you had proven yourself. That's when you sold them the real garbage, the stocks with no floor. And when those collapsed, you blamed the market. No one could have predicted this, but I've got another opportunity if you're interested. Some people lost their entire retirement accounts, and Belfort bought a yacht. So how did it end? The same way most scams end. Someone talked. The FBI had been investigating Stratton Oakmont for years, but the case was a mess. Hundreds of trades, shell companies, offshore accounts. Belfort had lawyers, good ones. What finally broke it open was an informant, a broker who flipped. He wore a wire, recorded conversations, handed over documents. In 1999, Belfort was indicted on securities fraud and money laundering. He cooperated, gave up his partners, testified against dozens of people. And in exchange for that cooperation, he got 22 months in prison. Not 22 years, 22 months. He served less than 2 years for stealing over $200 million from working-class Americans. Now here's the absurd part. When Belfort got out of prison, he wrote a memoir. It became a bestseller. Martin Scorsese turned it into a movie. Leonardo DiCaprio played him as a charming anti-hero, and Belfort became a motivational speaker. He now travels the world teaching sales techniques to corporations, the same techniques he used to defraud people. He charges $50,000 per appearance. He's made more money as a reformed criminal than most of his victims ever had to begin with. The restitution he was ordered to pay back, $110 million, he's paid back around $14 million. The rest is functionally uncollectible. So the people he stole from are still waiting. But let's zoom out, because this isn't just about Jordan Belfort. The pump and dump scheme didn't die with Stratton Oakmont. It evolved. You see it now in crypto, in meme stocks, in influencer-backed SPACs. The structure is identical. Create hype around a worthless asset, drive up demand, sell at the peak, leave retail investors holding the bag. The difference is that now it happens on Twitter instead of a phone. The brokers are Discord channels and Telegram groups. The boiler room is your feed, and it's faster. A pump and dump that used to take months now takes hours. The tools have changed, the psychology hasn't. Here's the uncomfortable truth. What Belfort did was illegal, but the system that allowed him to do it is still legal. Brokerage firms still make money on spreads. Market makers still control prices on thinly traded assets. Sales tactics that border on manipulation are still